Pros. Morning, everyone. That says hello. All right. Good morning, Trade Pros on YouTube. You hope you guys are having a great day. This is our morning market update for what day is it? April 29th. We got 2 days left in the quarter, and not the quarter, in the month. Today and tomorrow, and then we flip to 1st of May. So let's talk a little bit about what we've got going so far, because we have so many things that have come out in the last 24 hours. It's kind of boggling. All right. Let's start with yesterday. So yesterday at 10 a.m., we had consumer confidence readings, and they come out at 86.9 versus 87.9 expected, and a prior number 120. So the absolute lowest reading since June of 2014 for consumer confidence. The market had dropped on that news and was bearish yesterday. All right, and there was trade opportunity off it. Then after hours, at 4 p.m., 4:06 approximately, Google or Alphabet comes out with their earnings report. They released an earnings per share of 987 versus 1033, but their revenue was strong. They beat on their revenue, $41.16 billion in a quarter, Google. Expected a 40.38, so that's a beat, and gross profit margin was up. All right, but when you look at their segments, advertising did worse than expected, 33.7 billion versus 35. About 80% of the revenue comes from advertising still, but their cloud platforms did really good. Their YouTube segment did really well. All right, and in their notes they said it's because of the morning market updates at the Trade Pro Academy channel. If you read the report, you'll see it too. But you got to dig really deep to see that. But they put it in there. They put it in there. All right. So Google more or less was a better than expected report. All right. On an earnings per share basis, on adjusted EPS, they didn't beat, but they still had more revenue. And so the market was taken aback on that and say, hey, that's a surprise. And it gave them reason to buy it. And so we wiped out the consumer confidence. Now, flashed up this morning, you got MasterCard that came out, 4 billion revenue versus 3.97. So MasterCard beats. All right. Their net income was slightly lower, but their revenue was higher, and volume and purchase volume on credit cards are up 8%, which makes sense. People are using their credit card to pay for rent in some situations. So we are seeing the use of a MasterCard more often, but there aren't any extraordinary loss provisions. There aren't any write-downs due to, bad debt expenses. So that was sort of a good report as well this morning. Boeing comes in and it ends the good news. Boeing is just an absolute massacre. They lost $4.7 billion in one quarter. Okay. And it makes sense. They're saying we're going to restart our 737 MAX production line in 2020. They gave some good news, some good guidance, or some good ideas. But, I think Boeing's in trouble. I think we are, Boeing, I think we're headed probably lower, and it's going to get ugly. And so that's not a good report at all. It's just an atrocious quarterly report from Boeing, much worse than anyone would have expected. And the expectations weren't good for Boeing. All it had to do was not do bad. All right, Starbucks also had earnings. It posted its first quarterly same-store sales drop in 11 years, which makes sense. I love Starbucks, and I haven't gotten a Starbucks in, it's actually been a couple of days. It's not as long as you would think. They have like a pickup window, and then you just go in and get it, no contact with people. But anywho, Starbucks comparable same-store sales fell 10% in the second quarter. Worst downturn since 2009 for that metric. All right. It says that roughly half of the companies in the U.S. are closed, or the stores, Starbucks stores, plans to reopen some of them in May. Okay. So that's where that is. Other earnings today. Today's going to be a huge day. Is going to be Microsoft, Tesla, Spotify, General Electric, Facebook, eBay, Hasbro, CME Group, Qualcomm, General Dynamics, Valero Energy. There's no shortage of earnings coming after the bell today. So after the bell, remember, if you got some swing trade positions, you're going to have some volatility. Tighten up those stops or get them off and put them on after the news, or hope to get lucky. And hope to get lucky doesn't work. Hope got Obama elected, but it won't work for your trading approach. Okay, so that's what we got after the bell. We still have to talk about the GDP number. So GDP this morning, very, very odd occurrence. And look, I'm transparent. I lost 2 trades I took on GDP. Small ones because I pre-market. I would have traded bigger on GDP had this not happened. Okay, so we're waiting for the GDP print at 8:30. 8:30 hits. There isn't really any news. Okay, GDP is delayed, which happens occasionally. I get it. Okay, there's a whole infrastructure behind the scenes we don't really appreciate of how these earnings and numbers come out. It's delayed a couple minutes. No big deal. But then we get a drop from Gilead, right? In a very, very coincidental timing, seconds before the GDP print. I'm expecting the news squawk to talk about GDP, and they're yapping about Gilead. And me and Victoria are in the elite room like, what the hell's going on? How come they just talk about Gilead? Let's see some GDP numbers. And Gilead, coincidentally announces that its trial has hit its primary endpoint, which means absolutely nothing. It means the trial has ended. Doesn't mean that there's any kind of result. All right. Doesn't mean that results approved. Doesn't mean that it's showing any effects of it helping battle COVID-19. All right. There are not any less effects in eating Lysol wipes. Okay. There isn't any information that comes out other than the trial has ended. All right. And so it was halted before that, making it seem like there'd be a big report. Okay, great. I can deal with that. Traders, we get to deal with curveballs all the time. And then GDP comes out at plus 4.8%. And I looked around the news wires and everyone reported it wrong initially. And me and Victoria were like, what? So it really just threw everybody off. So GDP was plus 4.8%. I'm like, there's no way. Then I'm trying to think in my head, how is this possible? Okay, maybe the medical supplies industry. There's no way that's going to offset the loss of businesses being shut down for pretty much all of March or the 3 weeks of March. And then they say, correction, it's minus 4.8. I'm like, there we go. That makes sense. And then by the time that happened, Gilead was kind of the bid. It kept the market up. So it came out of minus 4.8 GDP versus minus 0.4 expected. Okay, this is officially the start of a recession, potentially. Okay, when you get a negative GDP print, it officially launches a recession start. But for it to be qualified as a recession, we need a second GDP print. But if we're going to get a second negative GDP print, then isn't this the start of it? And so the start of a recession happens with the first GDP print. It's confirmed on the second negative GDP print. And, I'm more than certain it's going to be negative in Q2. So this is not good news. It was worse than expected. We expected a negative print. We got it, but it was worse than expected. Fuddled a little bit with this whole study out of Gilead with their really hard to pronounce drug name, remdesivir. I don't really even care, to be honest with you. And so it threw off the GDP trade, and now we bid up to 26.75 overnight highs. I gotta tell you this: I think on the open, this market gets dumped. Be very careful. All right, nice little bid on 300,000 contracts. Nice little weak rally. Take out the shorts, and we're gonna let it have it to the downside. Be very careful. I don't think this market advances through 29.40 on a negative 4.8 print. Somebody's going to have to deleverage. Think about this. We also have the Fed at 2 p.m. today. He's like, look, crappy GDP numbers, and we got the Fed. I need to offload some size. Careful, careful, careful. As bullish as it looks, got a feeling there's going to be a dump on the open. We get above the 40, then that feeling is off. Can't fight the Fed. If the Fed wants to throw $6 trillion a day at it, you got to buy it. All right. So GDP comes out negative. 10 a.m. we have pending home sales. 10 a.m. we also have the investor confidence index by State Street. 10:30 we got the crude oil inventories. Crude oil's on an absolute rip this morning. All right. Today we also have the USO reverse split that's taking place. So we're going to see what price trading at 9:30. You could probably already check pre-market. 2 p.m. we have the FOMC announcement. All right. There's not much expected in terms of change of policy, but the press conference could be very interesting at 2:30 by Jerome Powell. And the way he answers questions and what he says, people are going to read between the lines. That's going to transpire to volatility. Then at 4 p.m., we have all the earnings. Okay, so it's going to be a flurry of busyness. We said on Monday it's a slow day, but watch out because once we pick up, we're going full force. Welcome to full force. All right, that's what it looks like. So you guys be safe out there. Manage your risk, Trade Pro on YouTube. We'll get this thing started. I want to hand it off for an oil update, but be very careful. It is not what it seems. I'm seeing an artificial bid here being held on very low volume. When it opens, it's a whole different picture. Watch the open today. On the open, if you got high volume and markets are ripping upward, great. That's a great opportunity to look for a long on a pullback. If you got some high volume and then markets are not going up, look out, stops below. That's the first sign. All right. We got a little bit of a buy stop or a short squeeze here, and then we're going to continue down. Love you guys. Be careful. Trade well. And we'll see you tomorrow on YouTube. Take care. Goodbye.